Bunny glass tower. 10 carats for the big account, just a humble small amount. Walked away, the deal was done, didn't feel like I had won. Then the teller made a slide to a bunny waiting inside. 90 carats fresh and new, my jaw just dropped, what could I do? Wait a minute.
Wait. Bunny just deposited 10 carats, and the bank just gave away 90? Where did those other 80 come from? Nobody printed them. Nobody dug them up. The bank just made them out of nothing. And guess what? This happens every single day, in every bank, in every country, right now. At the end of this video, you'll understand how banks create money out of thin air using nothing but your own deposits. You'll see exactly why this is legal, why it can go horribly wrong, and what it means for your carrot savings. No textbooks, no boring lectures, just bunny, carrots, and a very suspicious bank. Okay, let's start with what everyone thinks a bank does. Hello, I'd like to deposit 100 carats, please. Keep them safe for me. Of course, we'll keep them right here in the vault, safe and sound. Perfect. So my 100 carats are just sitting there, in a box with my name on it? Sure, something like that. Bunny walks out happy. He thinks his 100 carats are sitting in a cozy little vault box with a tiny bow on it. They are absolutely not. Here's what the bank actually does the moment Bunny walks out that door. Okay, team, Bunny deposited 100 carats. Keep 10 in the vault, lend out the other 90. But don't those 100 carats belong to Bunny? Technically, yes, but Bunny won't ask for all 100 at once. Nobody ever does. So we lend the 90 out and collect interest. It's genius. Is that legal? It's the whole banking system, my friend. Wait, so the bank is lending out money that belongs to Bunny? And Bunny doesn't even know? Yes, but here's where it gets really wild. Because those 90 carats the bank just lent out, they get deposited again. And then those get lent out. And then those. And then those. And then those. And then those. Here's where your brain might break. A little. Bunny deposits 100 carats. The bank keeps 10, lends out 90. The bunny who borrowed those 90 buys a carrot cart, and the cart seller deposits that 90 into the same bank. Now the bank has 90 more carats. It keeps 9, lends out 81. That bunny deposits the 81. Bank keeps 8, lends out 73, and on and on and on. So, I put in 100 real carats, and the system now has 1,000 carats floating around? Essentially, yes. But where did the extra 900 come from? They're basically promises. I owe us. The bank promised it has the carats. It doesn't. Not all of them. So the bank lied? The bank optimistically forecasted. It's called fractional reserve banking, and it works great as long as nobody panics. And this right here is where the whole thing can collapse. Let's talk about what happens when everyone asks for their carats back at the same time. One Tuesday morning in Burrowtown, a rumor starts. The bank doesn't have enough carats. Nobody knows if it's true. But here's the terrifying thing about banking. It doesn't matter if it's true. If enough bunnies believe it and all go withdraw their carats at the same time, the bank actually runs out. The rumor becomes real. I heard the bank only has 10% of the real carats. I want mine back now. What? If he's pulling his out, I'm pulling mine out too. Wait, but the bank was totally fine this morning. What happened? The bank was fine this morning, but if everyone withdraws at once, we don't have enough real carats to cover it. We never did. That was always the deal. Wait, you're telling me my carats were never actually there? They were there in spirit, and in a spreadsheet, and in the economy we built together. I want real carats, not economy spreadsheet carats. This exact scenario has happened in real life. The Great Depression, the 2008 financial crisis, Silicon Valley Bank in 2023. Each time it started the same way. Confidence collapsed, bunnies panicked, and banks that looked perfectly healthy on a Monday were completely empty by Thursday. So the money was never real. The whole economy is built on trust, and trust can disappear overnight. Yep, but here's the twist. This system also built everything around you. roads, schools, businesses, the phone you're watching this on. So it's not all bad. Let's talk about why it mostly works. Okay, deep breath. The system is wild, yes, but it's not completely insane. There are 3 things stopping Burrow Bank from collapsing every Tuesday. 1. Reserve requirements. The government tells banks how much real money they must keep. They can't lend out everything, just most of it. 2. Deposit insurance. In most countries, if the bank collapses, the government guarantees your savings up to a limit. Your carrots are protected, even if the vault is empty. 3. The central bank. Burrow Town's lender of last resort. If a bank runs out of real carrots during a panic, the central bank can create real carrots and lend them over immediately. It's like a fire extinguisher for financial fires. Wait, the central bank can just create carrots out of nothing too? Welcome to modern economics, Bunny. Okay, real talk. Your savings in a bank are safe, up to the insured limit. In most countries, that's a large amount. Don't panic. But here's what's interesting. The bank is making money from your money right now, while you get tiny interest. They're lending it out at much higher interest, every single night. So the bank is using my carrots to make money and just giving me a tiny slice back as interest? We prefer the phrase mutually beneficial relationship. You get 7%, I get 0.5%. That's mutually beneficial for exactly one of us. Well, when you say it like that, invest your carrots. Don't just let the bank borrow them for pennies. I can't believe it took me this long to figure this out. So, subscribe.